Hi, my name is David Lincoln. I am a trader of VIX products. I used to be a market maker at the Chicago Board Options Exchange in Chicago, and I'm somewhat knowledgeable on VIX ETPs and ETNs, of which TVIX is one. Today in the morning, Credit Suisse announced that they will be delisting a number of their ETNs, including their gold and silver ETNs, and volatility ETNs, ZIV, VIIX, and TVIX. Now, I've received a lot of questions, and there's a lot of false information out there going around. So it's a little early in the game now because we've just gotten this news today, but let me try to set you straight on a couple of the misconceptions and questions I've been getting all day today. First of all, this does not appear to be based on any sort of price movement of TVIX at this point. The fact that Credit Suisse, which is a major company for exchange-traded products, is delisting all of these products at the same time would lead us to believe that this is not specifically about TVIX or even necessarily specifically about volatility ETPs. I say ETPs because there are different types of exchange-traded products. There are exchange-traded notes and exchange-traded funds, of which the ETPs we're talking about here are exchange-traded funds. And Credit Suisse came out with an announcement today, which I'm putting up here behind me, listing all of the exchange-traded notes that they're looking to delist. So this is supposed to happen July 12th, and what they've said is that they will not be issuing any new shares after July 12th. If you're not familiar with the way ETPs are issued, they are traded where new shares can be issued by authorized participants. It's a system that you can learn more about in some other video. But essentially, once authorized participants are no longer issuing new shares, then these products can move away from the price that they're quote-unquote supposed to be. Now, TVIX is, although you'll see many videos talking about how it's based on buying and the selling of the front 2-month futures in volatility futures, although it is based on those two futures, TVIX is modeled around an index. And thus, the way that the people that are making markets in TVIX shares make markets is they make a market around an index. So they can look up this index and then they can say, oh, well, right now TVIX is cheaper or more expensive than that index, and they can buy or sell to get it back in line with the index. Now, TVIX has traded at a premium to the index at times when they temporarily stopped issuing shares. However, that's not the case here. And from this announcement, it appears that they will be delisting this from the exchange. So even though the shares will still be able to trade sort of over the counter, they will no longer be on the exchange. So my advice to anybody who's watching this who is a retail trader now would be to get out of these shares before July 12th. Now, and I know some retail traders, there's some confusion here about, well, is there going to be a run on the shares? Is TVIX all of a sudden going to go just down more than it quote-unquote should, more than the VIX futures indicate it should? And that is most likely not going to happen. This is because TVIX is based on VIX futures, which are based on the VIX, which is based on the S&P 500. So the S&P or the SPX is the bigger instrument here, and thus there's plenty of liquidity in the SPX for TVIX to move any direction. So if a bunch of people decide today that they want to get out of TVIX, well, then TVIX just goes out and sells VIX futures on the open market. And maybe for a moment the futures pull lower, but it's not like there's going to be any sort of rush for the doors here. This is not a situation like a run on a bank or anything like that. And there's been a lot of speculation as to why they're doing that. But this, people saying, well, TVIX is doing great. Why would they do this? Well, you have to understand, first of all, that Velocity Shares or Credit Suisse is going to make money by how many people own shares of this, right? It's not necessarily the share price. It's just how many people own shares. They get a little fee when people being long these shares, and thus the actual share price going up or down is less relevant to them than just how many shares are outstanding at any one time. And if you study up on ETNs, you'll see authorized participants can typically create batches of 50,000 shares at a time, or retire batches of 50,000 shares at a time. So generally in the ETN business, if you have an ETN that's popular and a lot of people are buying it, then you're going to make money. If you have one that nobody's interested in, then you're not going to make money. And the fact that they've delisted all of these at one time makes me think that this is either some sort of strategic financial thing for their shape as a company, or it is some risk thing where they're feeling like they're taking on too much risk with this, and it has the potential, it is not the way that they want to risk their access to capital. Remember, every company has a certain access to capital, and the risk, there is sort of an overall level of risk in the world associated with the VIX and these markets and stuff. And who is carrying that risk at any one moment is dependent on the structure of some of these things. And although TVIX is not it's the people that own TVIX that are carrying the risk, not Credit Suisse. However, if you have a situation where we had a month or two ago where TVIX is up around 1,000, when TVIX was up around $1,000, the number of people owning TVIX was swelling, and it was becoming unmanageable. It was becoming such a big fund that when you have a big move up and there's so many people in this fund, all of a sudden you have liquidity problems, and they would find themselves, for example, because it's a 2 times leveraged fund, TVIX, they would find themselves in a situation where at the end of the day, they either had to buy or sell a whole lot of futures. And that can get pretty scary at times. And there are metrics to judge this sort of thing. You might want to check out maybe Six Figures Investing if that's something that interests you. But it did get to a point right around when TVIX was $1,000 where it was getting unwieldy, and it kind of, it's this two-edged sword for them because, like I said, they're making money when all these people buy TVIX, but they have this risk that is kind of hard to quantify in certain ways. And this might not be the place where this company wants to put all their eggs in this basket, because essentially something like this could reel out of control and could potentially bankrupt the firm if they don't play their cards right. Now, I was a trader of 2 of the other firms that they're delisting, UGAS and DGAS, which are natural gas funds, for a long time. And so it's a shame that those are leaving as well. But I think that you can take comfort in the fact that all of these funds are being delisted at the same time to say that this is not necessarily about volatility, and it's not necessarily specifically about TVIX. It's about strategically this company changing its policy. And I don't think that I don't think this is necessarily a bad thing for volatility either, because the 2 times leveraged fund, you can get into a lot of trouble with a fund like that, as a lot of people learned when this thing went to 1,000. Remember, TVIX went from 38 to 1,000 in a matter of a few sessions, and that is, several 100% move. It's like not in one session, but over over a number of sessions, it created a huge move, and that's not the kind of risk that most people want to put on, and it caught a lot of people by surprise. Believe me, I talked to a lot of people that were taken by surprise by this, and it was not a fun thing. And traders know out there, anybody who's an options trader who understands options knows that you could create with the existing products that we have now that are still left, like UVXY and VXX, you can create the same sort of leverage and more as 2 times TVIX created. And, a lot of professionals, and I would consider myself in the group of professionals, would say to themselves, this product TVIX, it makes it too easy for some retail traders who are just starting out to get into trouble. Now, you can make, there's of course an argument to be made. It's the same argument with like drugs, should people have the right to determine their own, whether their decision-making process in life and what they want to put in their body? Well, we could debate that. Do people have the right to determine what kind of risk they want to take? Well, we could debate that too. TVIX, however, was something that got a lot of people in trouble. And people like me or some of my fellow educators on volatility can attest that every time TVIX goes up, our inboxes are full of emails asking about TVIX from people that didn't understand TVIX, bought TVIX, and now they're stuck holding it and it's going down every day. And they say, walk me off the ledge. What am I going to do with this? So there's been some news stories talking about how a lot of people on Robinhood have bought TVIX recently. And I suspect that a lot of those people do not understand this product. And if this wasn't part of the decision for Credit Suisse delisting this, well, it certainly should have been, because you're opening yourself up to trouble when you have all these people that maybe don't understand your product that are taking risk with this, because TVIX is a spot to lay off risk for a crash, for sure. And you're switching the risk for a crash to people that maybe don't even have the cash to cover that risk. And that creates cracks in the entire system. So just the basics of what I'm trying to say here. This is not about TVIX necessarily, because they're delisting how many products? 4 or 5, 10 products, 9 products right now at the same time. So it's not just about TVIX, it's about all these products. 2, there's not going to be some kind of run on the banks here. You have plenty of time to get out of your TVIX leisurely over the next few weeks, but I would recommend to get out of it over the next few weeks. And if you still want to have some sort of volatility trading thing, you can consider VXX or UVXY as alternatives. Remember, TVIX is a 2 times leverage product. UVXY is 1.5 times. VXX is 1 times. For the people that were in ZIV, ZIV is a more interesting esoteric product that's based not on the first 2 months of the VIX term structure, but based on a mix of the mid-months of the VIX term structure. And a lot of people enjoyed that as a sort of, once again, a sort of esoteric, specific product, and are kind of mourning that going away. But once again, you could mimic that by yourself if you really wanted to, using futures and whatnot. And also, we still have VXX and UVXY. And even before we had any of these products, if you want to sell volatility, you can do so directly in the SPX or by using your favorite tech stock as a proxy, whether it be Apple, Facebook, Amazon, Google, this sort of thing. So I hope that clears it up. If you do have specific questions on this that I haven't covered here today, please just leave them in the comments below and I'll get back to you right away. I very much enjoy educating people about VIX products, and it's my passion. So feel free to reach out to me and I'll do the best I can to help you out. Let's take a quick look at the chat and then I'll end it here. Hey, what's up, Tom? How's it going? These are, yes, TVIX is an ETN. All of these that are being listed are ETNs. TVIX has not been doing great. Well, TVIX is not. It was not made to do great. It was made as a tradable product. TVIX was made to mirror. It was made to trade for short periods of time. In fact, 24 hours. So when we look at charts over years, that's not the benchmark that it was trying to achieve is not growth over long periods of years at all. So that the fact that it goes down all the time is irrelevant to its success or failure as a fund, certainly from Credit Suisse's point of view, and it should be from your point of view too, because I teach people not to be long it for more than 48 hours at a time, and I know many people whose main strategy is actually to be short TVIX. So yes, the charts go down all the time, but that is not at all related to why they've discontinued it. Says Natalie, should we sell our shares? Will it possibly go back up again? Yeah, TVIX could go up, down, or sideways between now and July, and even after then. I have no information for you on which way it's going to go between now and then. Like I said, I generally don't hold on to it for more than 48 hours at a time myself, but to predict exactly what's going to happen to TVIX in the next 24 hours is impossible in my viewpoint. Some bad news could come out right now and it could go straight up, or the market could continue to rally like it did today and it could go straight down. Are they all leveraged? Well, the funds that are being delisted, most of them are leveraged. ZIV is not leveraged, and neither is VIX, but the gold fund is 3 times leveraged, is triple leveraged. In fact, the funds that are listed that are going to be delisted here, I would say are some of the riskier funds in the portfolio for Credit Suisse, in that they're all triple leveraged or double leveraged. And the other ones are VIX ETNs, but these are some of the more risky funds just because they're triply leveraged products. You see a crash coming Thursday. Well, that's like your opinion, man. No, I'm just kidding. Like I said, maybe, but just to put it in perspective, usually crashes don't happen, right? It could happen, certainly, but usually they don't happen. So betting on a crash on any specific day is probably not going to work. You might get really lucky, but for those of us who are trying to make money in the market ongoing, we don't really want to put all our eggs in they're going to be a crash one particular day. That's just my take on that. So like I said, if you own TVIX, you want to think about getting out of it between now and July 12th. My recommendation to everybody who owns TVIX is to not hold on to it for more than 48 hours at a time, because it does decay over time. Now, that the last month has been an exception to that rule because the term structure is very flat. We've had some crazy market stuff, and thus it hasn't been moving down as quickly recently as it was before. So there's an equal chance that it goes up or down between now and tomorrow. And I can't make any recommendation as to buy it or sell it to you because I don't have a crystal ball. I don't know what the future is going to bring tomorrow. I am known for being short volatility products over long periods of time. If you look at the chart of TVIX over long periods of time, it does go down, and thus it makes sense to be shorted over the long term. Over the short term, it's anybody's guess. Crash has never happened. Well, they would call some of these big down moves crashes. The flash crash, they would call a crash. The 87 down move, they would call a crash. It's I guess it's semantics. If how far does it have to go down to be considered a crash? I guess we could debate that, but not right now. What happens to open positions after they're delisted? I think the open positions will probably going to get switched into the over-the-counter market. Thus, they still exist somewhere, but you would have to get out of them after the 12th. You would have to have your broker fill out specific special forms and this sort of thing. And, it might trade for a little bit after July 12th just based on like residual shares, but it's going to get harder and harder to deal with as time goes by after July 12th. So if, it's in your best interest to kind of get out of it before then. AQ, the best information I have right now is July 12th. That would be 7/12. 7/12. I could update you on that. I will update you on that if I get better information. Once again, my feeling is that anybody should not own TVIX for more than 48 hours at a time. So if you're asking my advice would be if you're long TVIX, if it doesn't do anything in the next 48 hours, I would exit your position. If you don't want to take my advice, that's fine. Then I would say, in addition to that, right now we have the date as July 12th as the last date these things trade tentatively, and so I would want to get out of it before that. In fact, this piece of paper in front of me says the delisting will become effective on July 12th. So they are going to stop issuing further New York Stock Exchange ETNs today. So essentially, they're going to stop issuing new shares today. So stuff could trade at either a discount or a premium to its actual price because they're stopped trading it today. So some of these products could go up more than you would think they would in the next week or so because they're not issuing any new shares anymore. But they will be delisted on July 12th, according to this thing that's behind me right here, this Credit Suisse thing, which I will put a link to in the chat. So yeah, there is a possibility that like TVIX could trade at a premium that is higher than its associated index for a little period of time now, in between now and when it gets delisted. But I would suggest to you that you don't try to play that, trying to catch this premium game, and that unless you're a very knowledgeable trader in futures arbitrage, which probably most of the people watching me right now are not, I would not play that game. My suggestion to you would be to exit your TVIX position in an orderly fashion in the next 48 hours. And if if you have your heart set on being long volatility, then sell TVIX and buy UVXY. But either way, use this information, put it behind you, and move on to the next thing. It's not the end of the world. There's very similar products out there to this. I don't think that this means that they're going to delist UVXY now next, and that this is some sort of trend or something. But I don't have any knowledge either way. Yes, traders are conspiracy theorists, and because it's fun. And the market is a very difficult thing, so we all look for some kind of edge, even if it happens to be astrology or conspiracy theories. I was a market maker for many years, and I hear people all the time saying, "Oh, the market makers, they're on expiration, they're pushing the stock up this way, or they're pulling it this way." And us as market makers, what we would say was, "Oh, those Goldman Sachs guys upstairs, they're pulling the market this way." And I'm sure the Goldman Sachs guys upstairs say something like, "Oh yeah, the Fed, he's pulling the market this way." Everybody has someone else to blame. So just kind of the way it goes round and round. So there you go. It looks like they're stopping making new shares. Maybe I said that a bit wrong at the beginning. They're stopping making new shares today. And it says the NASDAQ ETNs are going to end up stopping on the 2nd, it looks like. And the New York Stock Exchange ones mark up to and including. Yeah, so it looks like New York Stock Exchange ones end July 10th, and NASDAQ maybe July 2nd. So I think what that means is that I think so if you look at this thing behind me, it's going to show you which ones are NASDAQ and which ones are New York Stock Exchange. So basically everything's NASDAQ except UGAS and DGAS. So TVIX and TVIX is New York Stock Exchange, or is NASDAQ. So it says that NASDAQ ones end July 3rd. So it is July 3rd for for TVIX. So TVIX ends trading July 3rd. We're in UGAS, DGAS, July 12th. But either way, you know, get out of your positions in these things and move on to the next thing. It's no big deal. There's no huge conspiracy theory here. There's not going to be a run one way or the other. And there's not really a tradable situation here as far as I can figure it. Like I said, TVIX may trade at a premium to its price, but there's no way to really put that arbitrage on easily anyway. Okay, so I hope that helps out a little bit. Put any more questions you have down in the comments, and I'll do my best to answer them. And yes, you know, keep doing the conspiracy theories if you want, but there's not a lot of smoke here. It looks like they're just changing the direction the company's going in with this stuff right now. And it is possible that like the people behind the group in Credit Suisse that's involved with these funds and stuff is like, look, this is too risky. We had a close call a couple months ago with TVIX almost reeling out of control, and we just don't want to deal with that anymore. And while we're at it, let's get rid of some of this other stuff. That's definitely a possible thing for why this happened. But that's the information we have right now. And best of luck to everybody. Leave your comments below, and thanks for watching.
You're watching Famous Game.